Indian markets not looking good. 79, 80 points lower now on the Nifty, almost 90 points.
The Nifty's breached the 17,000 handle.
The mid-cap side of things, they continue to at least underperform the benchmark, so that index is down 1.5%.
From the day's low, which is about 16,825.27, the markets have rallied close to about 100 odd points. 17,000 handle on the Nifty has held. So after rates sharply plummeted in the first half of the trading session, there was a very powerful recovery. Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track about 6 hours of the day's trading action in 5 headlines. I'm Reema Tendulkar, and these are the headlines for the day. Sharp cuts on Dalal Street despite a late recovery. The sensex loses over 350 points. The Nifty down over 100. All sectoral indices end in the red except FMCG and media. The mega merger of HDFC with HDFC Bank gets the final nod from NCLT, paving the way for integration of the housing finance business into the bank. Analysts see the expected move tempering growth for the bank. Adani shares tumble even as reports claim the group has put a 35,000 crore rupee petchem project on hold in a bid to allay concerns over debt. Adani Group spokesperson tells CNBC-TV18 the status of growth projects will be evaluated. Cochin Shipyard gains over 3% after it bagged a new export order. Tata Consumer falls after it calls off deal talks with Bisleri. CLSA bets big on most of Indian gas companies. Gold prices hit an all-time high in India, Australia and UK. Fears of global banking crisis spur heavy flows into the yellow metal. And here's a lineup of what we have for you in store on Markets Today. We bring you market opinion from Gautam Trivedi of Nepean Capital, Timothy Moore of Goldman Sachs. In Corporate Voices, we've got Abhijit Roy, MD CEO, Berger Paints. First up, the action from Dalal Street. Markets ended in the red despite a sharp intraday recovery from lows. The Nifty and the Sensex closed over 0.5% in the red. Financials led the intraday recovery after a breach of the October 2022 lows. Except the FMCG and the media sector, all the sectoral indices ended in the red. BSE companies erased a market capitalization of about 1.88 lakh crore rupees. Surbhi is here with the details. Surbhi.
Well, it was a really volatile start to what promises to be an action-packed week for the markets here in India and around the world. And what we got was a very sharp pullback move, a recovery rally of sorts. The trigger came in the form of a lot of chatter around the possibility of a final ending of conflict between Russia and Ukraine. These are, of course, all the kind of reports that were doing the rounds. But that's exactly what the market needed. Any sign of good news on which the shorts could start running for cover, and that's what happened, making the Nifty sort of try and claw its way back towards the 17,000 mark. The Bank Nifty, though it's still a little distance from the 200 DMA, nonetheless, we saw some recovery from the lows there. Having said that, the broader market continued to see a lot of pain today. If you look at the advance decline ratio, for instance, there were 3 stocks declining for every one that is falling. So what next? We've had a lot of news flow from Europe over the weekend, the UBS and CS deal. Now the action really shifts to the US. And it's a 2-point question. What does the Federal Reserve do on Wednesday? And more importantly, in the immediate sort of time frame, what happens to some of the banks like First Republic, where the shares were falling 30% on Friday as well? It's still uncertain times, and that uncertainty is showing up in the way in which US yields, the 10-year yields, is moving back to a 3.3% level, and the dollar is moving as risk aversion continues to be the name of the game. But market participants do agree that we can always get very sharp, swift recovery rallies like the one that we saw today, because the market is very heavily short in India and in several key markets around the world as well. So expecting more volatility in the days ahead.
Thank you for that. And market opinion, Gautam Trivedi of Nepean Capital says the markets are in a precarious condition due to current bank crisis. Meanwhile, Timothy Moore of Goldman Sachs says financial stress manifested into an interest rate shock. Listen in.
I think the markets are in a very precarious condition right now, even notwithstanding the bailout of Credit Suisse by UBS, that apart. But I think the problem with the smaller banks, regional banks in the US is far from over. There are only so many banks that the US can actually bail out. If you think of all of the US smaller banks, or outside of the top 25 banks in the United States, collectively, they account for 70% of all construction and land development loans. So it's a very big element of the real estate sector, which itself is having its own challenges given the rate hikes. So I think there are problems in the United States. And as we all know, whether we like it or not, what happens in the US ends up hurting the rest of the world.
The framework, which is helpful for investors, is that we need to think about things in terms of three shocks that have happened. So obviously, there's first and foremost, a financial stress shock, and that's manifested then in an interest rate shock, and then that also likely has some sort of a growth shock. We've seen this shock in terms of broader financial conditions. We've also lowered our U.S. growth forecast by 30 basis points last week. Our U.S. economists did that because the smaller banks account for about half of the commercial industrial lending in the U.S., as well as real estate, both commercial and individual lending. So there's going to be some sort of a hit to growth.
Bank stocks sink across Europe even after Switzerland's largest bank, UBS, agrees to buy the emergency rescue of its rival Credit Suisse for a cut price of $3 billion deal. Post the deal, the chairman of UBS says the deal is financially attractive for UBS shareholders, whereas Axel Lehmann of Credit Suisse says that the bank will no longer be in its original form. Listen in.
I would like to make it clear that while we did not initiate discussions, we believe that this transaction is financially attractive for UBS shareholders, protects UBS from additional downside, and should support earnings growth over time. The terms of the transaction have the full support of the relevant regulators and secures financial stability for all our stakeholders.
The latest developments that emanated from the banks in the US hit us at the most unfavourable moment. One time, like last year, we were able to overcome the deep market uncertainty, but not this second time. The accelerating loss of confidence and the escalation over the last few days have made it clear that Credit Suisse can no longer exist in its current form. We are happy to have found a solution, which I'm convinced will bring lasting stability and security for clients, staff, financial markets, and to Switzerland.
Let's get to the second headline then. The mega merger between HDFC Limited and HDFC Bank has received the final approval from the NCLT. The stock exchanges had already approved the amalgamation between the two. However, the stocks, both of them, were down in trade today. Abhishek Kothari is standing by with more.
Well, as you mentioned, NCLT over the weekend we got to know that, has approved the merger of HDFC Bank and HDFC Limited. The exchanges had already, approved of the transaction of amalgamation. The deal will be the biggest transaction in India's corporate history. We also need to see integrity. Some of the details that they have sought with regulators, like stake in HDFC Life, can they take it above 51% post the merger, and other some key points that they have taken with regulators. So that addressal needs to be done. We earlier had the management of HDFC Limited, which was confident of this entire amalgamation or the merger process going through by Q1 FY24, that is either by June or July of 2023. Back to you.
Okay, let's get you more news on HDFC Bank. Sources tell CNBC-TV18 HDFC Bank may get some extension to reach the 40% priority sector lending target. This will come as a relief for the private sector lender. Lata's here with the details.
So usually reliable sources tell us that HDFC Bank may be given a little more time to reach the priority sector lending limit. Banks have to keep 40%, give 40% of their loan book to priority sector like farm and MSMEs and affordable housing. And the bigger concession of giving more time for reaching 4.5% CRR and 18% SLR may not come through. These sources told us that Reserve Bank may go by precedent. When ICICI got merged into ICICI Bank along with two other minor subsidiaries in 2002, ICICI Bank had to meet CRR and SLR from day one of the new merged entity. But it was given a concession to meet priority sector lending limit. However, ICICI Bank was told that the incremental loans it gives from the day of the merger, more than 40% has to be priority sector till it reaches the 40% limit. Our sources tell us that pretty much the same copybook is likely to be followed by the Reserve Bank. Normally, the Reserve Bank doesn't like to give CRR, SLR concessions as a principle. This is what a central banker told me some time back. a retired central banker. They don't like to give CRR SLR concessions because those are meant as buffers in times of crisis. And so they are not normally given.
Thank you, Lata, for that. Let's get to the third headline then. Adani Enterprises fell after the company put its 34,900 crore rupee petrochemical project on hold. In fact, the company's spokesperson told CNBC-TV18 the status of growth projects would be evaluated over the coming months. Vivek is here with the details.
Well, absolutely right. Also, over the weekend, PTI has reported that the group has now suspended work on a project where, the total project outlay or the cost outlay was close to 34,900 crore. This was a petrochemical plant that was expected to come up in Mundra, based out of Gujarat. Now, along with that, the company also has gone ahead and suspended plans to raise close to 14,000 crore, and this was for the fundraising for this particular project itself. Now, Adani Enterprises earlier had gone ahead and incorporated a subsidiary by the name of Mundra Petrochem. Basically, the intention was to go ahead and set up a greenfield coal to PVC plant in Gujarat. So we reached out to the Adani group. The response that we got from them was that Adani Enterprises will be evaluating status of growth projects in primary industry vertical over the coming months. So basically what's actually happening is that quite a bit of capex plans are now getting delayed or getting stalled, at least for the time being.
Thank you for that. Before we head into a short break, we leave you with some market opinion on the global banking system that we received during the day. Listen in.
The increase in interest rates in the US in particular is starting to have a lot of stress on the banking system. Fundamentals look okay across the region. I'm not overly worried about that. So I think that would create opportunities.
Global central banks and regulators are doing what they need to do to try and make sure that this liquidity crisis doesn't have broader systemic issues. And I don't think it does. So far, the issues that we have seen have been very specific to challenges that some of these banks had, and I would say improper risk controls. And so the issue of systemic failure, I don't really think is there. I expect that we're going to see a 25 basis point hike. And I think what's going to be key to the market going forward is what the dot plot looks like. I don't think the markets are going to stabilize until we get through the Fed on Wednesday.